November is almost over. The presidential debates are almost here. What do I always say? Let's get into it right now. We've got a really, really busy week ahead. We've got a lot of stuff going on. We've got a lot of volatility. Let's get into it right now. Global shares, they're mostly higher. As a matter of fact, let me show you evidence of this. The Dow is up about 344 points. The Nasdaq futures are up 200 points, and the S&P is up about 40 points. So things are definitely up overnight. Now, China is celebrating its National and Mid-Autumn Festival on October 1st, week-long holiday October 8th. Their statistics bureau showed that Sunday that industrial production rose 19% in August. That's a very strong sign from a year earlier as the economy recovered from the pandemic downturn. I don't know if they're being completely honest or not. We won't know that for a while, but I do know that certain parts that were missing from some of the things that I've been ordering are now available because they all come from China and they were on back order. Now I'm getting them like I used to. So for cameras, little glass things, the bottom line is it looks like things are coming out of China again. That's it's a step in the right direction. Regional markets are now seeing signs of improvement in economic activity despite COVID-19 pandemic as businesses strive to achieve a new normal with social distancing and mask wearing. And I'm going to tell you, I was in South Carolina. I was in Hilton Head this weekend, and they really had it under control. People were wearing masks. People were being very responsible. There was none of this weird, what should I do? Where should I go? It was a lot better than it was this summer. It was a lot more confusion going on. It looks like people are really kind of getting with the program, so to speak, at least from what I saw. Investors are hoping for additional financial stimulus from U.S. House Speakers Nancy Pelosi. Oh, that Nancy Pelosi, don't get me started. Said she hopes to find common ground for agreement with Treasury Secretary Steven Mnuchin after the $2.4 trillion package under the discussion failed to bridge the divide. And that's one of the reasons why the market was a bit soft, because they were planning on coming out with somebody, and none of the sides could come to terms. The Democrats, Republicans just couldn't come to terms. Bridging the overall top-line gulf would be tough. Working out hundreds of legislative details just before the November election, fuel filed over Justice Ginsburg's seat. There's just so many things going on. Also, investors' minds are on the debate, which is happening on Tuesday. That's going to be something. And I think we're going to start seeing in about a month a good... not a month, but like 3 weeks, about a few weeks before the election, we're going to start seeing a good trend developing in stocks that are going to, where we believed which president is going to win the election. And I've created lists for Biden stocks and Trump stocks, and I'll talk about them in the coming days so you guys can create a little portfolio for each and follow which ones are leading, which ones are lagging, and so forth. For the markets, the challenge is less about who wins and about how narrow the victory will be. Absolutely true. Because here's the thing. I think regardless of who's going to win, the market is going to keep doing well because the interest rate levels are so low and the Fed made certain commitments regarding the economy to the general public, and that's going to stay. But the few weeks before the election and the few weeks after the election, that's the gray area. And that's what we're trying to figure out right now. Stocks have been erratic this month, partly because of the election, with indexes setting new highs to start the month and falling sharply as investors are worried about value and tech value. And it appears now that stay-at-home stocks are starting to make upticks once again. Crude oil, again, below $40 a barrel. Anything below $41, $42 a barrel tells us that frackers in the U.S. are paying more for crude oil than they're earning, which is terrible, 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 and that puts additional pressure on each barrel of crude oil. Now, in terms of global economy, we've got consumer confidence tomorrow. Today's a quiet day, but we got consumer confidence. We got goods trade, which is really going to be a big report. We got petroleum reports, but the big report for the week, drums, the GDP report. What are we expecting? Look at this. Remember, before the pandemic, positive 2% was the target, 33%, 28%. Honestly, I don't know if it's even going to make a difference. But I guess if we're better than the consensus, anything below 30% negative is positive. Also, we've got jobless claims and personal income on Thursday, and construction spending and ISM manufacturing index. So, and employment situation on Friday. So do expect volatility to become rampant and kind of calm going into Wednesday, because usually nobody wants to make big trades ahead of GDP, especially with numbers that are so fragmented. I mean, down 28%, down 30%. What if we're down 20%? I mean, things can be all over the place. Jobless claims, we're moving a little slower than expected, and it hasn't been published yet. But we're below a million. We're like at 900, 800,000 jobless claims. And the issue here is there's a big worry that the numbers are staying high. Even though they're below the moving average, they've been staying relatively high. So again, jobless claims, personal income, consumer sentiment, employment situations. We've got a lot of data, a lot of employment data, a lot of manufacturing data. That's going to be big, big, big. Why? Well, because basic materials and development type of stocks have been leading. Matter of fact, if you look at the S&P on a monthly basis, you will see that basic materials and industrial stocks are way, way outperforming technology. On a 1 month basis, technology is like all the way there. Let's all the way at the bottom. And I told you that would happen, by the way. Let's look at the cumulative. Still cumulatively, still holding up consumer discretionary technology, basic materials, and industrial, but it's going to change. I'm telling you, look at basic materials and industrial, and finally, utilities and consumer staples. These are all defensive sectors. And by the way, if you look at my videos from 2 months ago, I told you that basic materials, industrial, utilities, and consumer staples is going to lead ahead of consumer discretionary, healthcare, and technology. And it's happening now. So the news and the data that we're going to get, the manufacturing data we're going to get at the end of the week, is extremely relevant and important. So keep your eye on the employment data, jobless claims, personal income, both the manufacturing numbers and most importantly the GDP, and don't expect a lot of volatility or movement before the GDP. That's the biggest report of the quarter, and it's going to tell us it's the last GDP before the presidential election, and it's going to tell us how we are doing, how we've done last quarter, and give us anticipation for the next quarter. So again, don't be surprised if the markets show a lot of volatility over the next few days, especially as we head into GDP. Thursday and Friday, expect less volatility today and tomorrow. I'm not expecting a lot of volatility today or tomorrow at all. Maybe price action, but not a lot of volatility. But maybe subdued price action in light of the GDP. Very, very important report. And again, with the numbers being down 30%, nothing that great. Now, I've got something for you today. I've got something important. I've got a pullback on a stock that's been really outperforming. This is Workhorse, ticker symbol WKHS. It's actually one of Tom Busby's favorite stocks, and I've been turned on to this stock. If you look at the trend on a 1 month basis, it's been moving lower. That's intraday data. If you look at daily data, it hit the 50-day moving average. Actually, it didn't even hit the 50-day moving average. That's a trend line. We can move that away. It didn't even hit the 50-day moving average. It bounced back, and it looks like it's going to hit the highs again. It already looks like it's going to be up about 7 points today. I would be looking to buy it right around the $27 level, and I would put my stop loss at the $20 level. And I think this stock will give us a nice run up, and I think it'll bypass the old-time high and start trending higher and make new highs. The profile of this stock, it's a Russell 2000 stock. It is a motor vehicle, passenger car bodies. It's not really as dependent on the COVID-19. And if you look at the 1 year return, 640%, 3 year return, 798%, 5 year return, 430. It makes about 8 to 10 times what the S&P makes in a year on year per average. And again, the numbers are very, very solid so far. And again, I like this stock right now. I would be buying it on a pullback because it's one of the strongest stocks, and I think it's going to take out the high. Now, if you want to be 100% certain, wait for it to take out the high and start basing like this a little bit. But if you're a pullback trader and if you think the markets are going to be making all-time highs, I would put a buy stop right at the $26.85, $27 level, and I would liquidate it if it breaks this low right here. Now, folks, before I let you go, and this is going to be a big week, there's a lot to pay attention to, but I've got something really important for you. If a 10 times world heavyweight trading champion wanted to give you special trades, would you let him? I sure hope so. I mean, 10-time trading champion, somebody who makes on average of $56,000 a year from his trading. If you've been using trophy trades for the past 2 decades, you would potentially be millions dollars richer. Yes, millions richer with a 97% success rate. In fact, in the past month alone, you could have had massive winners by purchasing 2 $4.50 options on DocuSign, $900 investment, and walked away with over $15,000, $15,350. Now, think about this, $900 into over $15,000. That's 16 times your money, just as recently as a month ago. Or how about this? 2 options in Adobe for $1.80. $1.80. That's $180. $360 total if I have it right. So you invest $360 and you walk away with $12,734. That's what you get when you follow the 10-time heavyweight trading champion. $900 to $15,000. $360 to $12,734. These possibilities could be real for you. This could be your future, but you need to hurry, especially with somebody who's got a 97% accuracy on his track record. You got to hurry, folks. The next trade alert, it's about to be sent out. You can't afford to miss this. Follow the link below. Get in before the entry window closes. Chuck Hughes is the real deal. He's amazing. And he's neighbors with Clint Eastwood. How do you not love this guy? He's a powerhouse. He's unstoppable. Chuck is unstoppable. $900 to $15,000, $360 to $12,700. I got to get in on this. Folks, you can't miss out on this. Follow the link below before the window closes. Do it now. Talk to you guys soon. Have a great day.